Okay, so we talked about manufacturing overhead or factory overhead, and we kind of discussed indirect materials, it's factory overhead, indirect labor, but there's also lots of different indirect costs. In fact, anything that happened inside the plant that can't be traced is going to be factory overhead. So factory overhead includes all manufacturing costs except direct materials and direct labor. And so it can be indirect materials, needed to make a product but that are not directly traced to the product, and indirect labor, any labor needed to make the product that's not directly traced to the product. Factory power comes from utility bills. Factory depreciation comes from the accounting department computation of depreciation. So there's lots of things that can be considered factory overhead. So if they can happen in the plant and they can have the word plant on them, but if they're not directly traced, then they're going to have to be in factory overhead or manufacturing overhead because they're overhead costs. So here it says assemblage and guitars incurred $4,600 of overhead during the year. $500 was indirect materials, $2,000 was indirect labor, and $900 of utilities, and $1,200 of factory depreciation. The $500 of indirect materials consisted of $200 of glue and $300 of sandpaper. So for each of these, you would debit manufacturing overhead, and the credit is according to what the transaction was. So if it's depreciation, the credit side would be accumulated depreciation. If they paid cash, you would credit cash. If it's materials being used, you would credit materials. For wages, you're going to credit wages payable. For the utilities, you're going to credit the utilities payable. So you're going to debit factory overhead, and then depending on what it is, you're going to credit it just like you normally would. So here's an example exercise for you to work and check, and then we're going to continue on. And I do want to just, before we continue on, I want to say that if it's prepaid insurance, then you would credit prepaid insurance and debit factory overhead. If it's property taxes, you would credit property taxes payable. So make sure you take a look at these and study what you would credit, but mostly what I want you to learn that there is indirect plant cost, and those indirect costs that can't directly be traced in the plant, go to manufacturing overhead. Okay, so those are actual costs because we actually had those costs. Okay, so allocating factory overhead, this is different from direct labor and direct materials because it indirectly relates to the jobs. Factory overhead cannot be directly traced to a specific job, so this is why we're going to learn how to allocate factory overhead to each job. So what we're going to do is learn how to calculate the formula that we're going to use to allocate. And what you'll need to do is memorize the formula. And it's called the predetermined factory overhead rate, or sometimes you'll hear it be called predetermined overhead allocation rate. It's got a few different names. Also predetermined manufacturing overhead rate. So notice that for this rate, both the numerator and the denominator have the word estimated in it. It's very important. See, estimated. So total overhead cost, the total estimated overhead cost divided by the estimated activity base. Now, I know that's a lot of words there, and let me just tell you what it is. That is the base that the company believes drives their costs. This estimated activity base is what the company believes drives their cost. Okay, so it could be direct labor hours as the activity base, or the direct labor cost, or the machine hours. If the job involves a lot of labor, then you would probably use direct labor hours if it's labor intensive. It could be direct labor cost. If it's a labor intensive production environment, they'd rather go by cost than hours. Or it could be machine hours if it's a machine intensive production environment. It's whatever drives the company's cost. The good news is, in the textbook world, they will tell you what the base is. So they'll say the base is direct labor hours, so then you would use direct labor hours, but it will tell you. Okay, so here we have an example to look at, and it says, assume that Legend Guitars estimates the total factory overhead cost as $50,000 for the year and the activity base as 10,000 direct labor hours. So the estimated overhead cost is 50,000. That's your numerator. And then the 10,000 direct labor hours, that's going to be your activity base. So that's going to be your denominator, 10,000 direct labor hours. So we divide, and so here we get $5 per direct labor hour. And that's what we call our predetermined overhead rate. Okay, so here is where it's just showing you how to apply overhead to jobs. So here, this job took 350 hours. So you would multiply it by your rate, $5 per direct hour, and that's going to give you your factory overhead. So each job will have factory overhead associated with it based on that rate. Okay? And just to make sure that we understand, when you apply it, when it says apply the factory overhead rate, you're going to multiply your rate, which was the $5, times your actual quantity. So our actual quantity here was 350 hours, and our actual quantity over here was 500 hours. So to apply the rate, you multiply it. All right. So remember, our estimated overhead costs were 50,000. So what that meant is, that we estimated we're going to have total cost of 50,000 for the year for overhead. That's what helped us get the rate. And then we estimated our number of direct labor hours. All right. So here is showing you where you take the actual labor hours for the job and multiply it by the overhead rate. And this is the amount of overhead that you're going to apply for each job. So total overhead applied for job 71 and 72 is $4,250. Okay, so what does the journal entry look like? Well, we're going to take it out of factory overhead because we are actually applying it to a job. Okay, and we're going to, when we place it, we're going to place it into WIP. Because the only way to accumulate cost in that job is to put it in WIP. It doesn't go into that cost of that job until we take it out of factory overhead and actually put it into WIP. But this is always your journal entry for allocating factory overhead. Debit WIP, credit factory overhead. So allocating factory overhead means taking it out of factory overhead and allocating it to WIP, which is your job. WIP is your job. So your factory overhead account has a normal debit balance. So to increase it, you debit it, and when you apply it, you're decreasing it, so you credit it. And usually, remember, when we're doing our allocation and we're getting our amount, the $5, we are estimating when we get our overhead rate. So the amount that we apply usually is different than the actual overhead because they're just estimated cost at first. Okay, so depending on whether actual overhead is greater or less than applied, the factory overhead account might have a debit balance or credit depending on if we over or under applied. Okay, so the best way to look at whether it's under or over allocated is through a T account. So let's just talk about it. First of all, factory overhead. Okay. Manufacturing overhead, factory overhead, whatever you want to call it, is an asset. So it has a normal debit balance. So every time we incur a manufacturing overhead cost, we're going to debit it. So these are going to be the actual cost. Okay, so the best way is to look at it through this T account. And let's just say that every time let's just say our actual costs are $100,000. Okay, that's going to be our actual cost on the debit side. And then every time we allocate it to our job, in other words, every time we move it into work in process, we're going to credit it. So let's just say we have total credits of $80,000 or $80,000 of overhead allocated. So if we looked at our balance at the end of the period and we're left with a debit balance, here we would be left with a $20,000 debit balance. It means that we did not take out enough, right? So that means we still have some factory overhead costs there because the actual is on the debit side. So if we didn't take enough out, we are under allocated because we did not allocate out quite enough. So when we close this out, we're going to have to get rid of this balance so that the factory overhead is zero. So I would have to credit it for $20,000 to get rid of it. Okay, and we're just going to assume that it can go to cost of goods sold. We'll talk about that part later. But if I still have a debit balance, that means that I under allocated. I did not allocate enough. All right.